Alright everyone, so in this video we are going to talk about the power of 3 by Flux Charts. So this is an indicator we're going to use to help us with our trades. So we have 3 stages. We have accumulation, we have manipulation, and then we have distribution. So what this means is accumulation when price consolidates or is in a range, and then manipulation is when price manipulates and fake out traders to a specific direction. And then we have distribution again. And then after distribution, accumulation starts again. Then we have manipulation, and then again we have distribution. And this cycle goes on every time during the day, on every time frame. This can go from the 1 minute all the day to the monthly. There is cycles of accumulation, manipulation, and distribution. So let's quickly look at some chart examples and then we can go through it. Alright, so when we look at this chart example, we can clearly already see a bunch of these happening. You have, for example, accumulation, then you have manipulation right over here, and then you have distribution right over here. So what happens after distribution? Then the cycle starts over. Accumulation, manipulation, and then we have distribution. And then it starts again. Accumulation right over here. Then we have a manipulation right over here, and then we have distribution. So this happens all day on every time frame. You have these cycles: accumulation, manipulation, distribution. So what we are going to do, you are going to go to indicators and you're going to type in power of 3 by Flux Charts. So what this enables you, this is going to give you a signal buy or sell. It's going to show you where the manipulation is happening, and it's also going to show you where the accumulation is happening. So let's quickly have a look. So you'll see these gray boxes is accumulation. Then those dark boxes are manipulation. And then we have our distribution: accumulation, manipulation, distribution. Accumulation, manipulation, distribution. So let's look at a few examples. And I'm going to show you how you can use this as an extra confluence for your own trading. So when you look at the chart, for example, right over here, we can see price reacted from what right over here, from a nice order block zone right over there. We had our accumulation, then our dark box for the manipulation, and then the entry model we are going to use is a inverse fair value gap. So if the inverse fair value gap is right over there, we want to wait for some sort of candle close below the inverse fair value gap, and then we're going to take our trade right over there. You're going to put your stops at the highs, and you are going to target a 1 or 2 risk reward trade. But you first need to wait for this signal right over here. So when we have another accumulation, then we have our dark box right over here. As you can see, manipulation, and then we have our buy signal, and we want to enter from the inverse fair value gap at the closure right over there. Then you're going to enter, you're going to put your stops below the low right over there, and you are going to target a fixed 1 or 2 risk reward trade. This one took a little bit longer. It went all the way throughout this one as well. But as you can see, we got it right there. Then again, we had accumulation, dark box, manipulation, and then we're going to enter from our first inverse fair value gap. Nothing there, nothing there, nothing there, nothing there. This is our first one. So now you need to make the decision for yourself. As you can clearly see in the previous two examples, this is happening at like close by to the swing at the low, and it's happening close to the high. Is it going to be worth it for you to take this type of trade where the first inverse fair value gap is in the middle? Your stop loss is going to be huge. So this is going to be your stop loss. If you enter right over there, and that's going to be your TP. You won't, that's way too huge. The range is for me too huge. So that's a trade I will actually not take. Why? Because it's too far from this high. So let's move on. Here you can see again, we had accumulation, big manipulation, and then we have a inverse fair value gap that has formed close to these highs right over here. We had a candle closure right over there. You can put your stops there at the highs, and then you can target a fixed 1 or 2 risk to reward trade. And as you can see, after some time, we got our TP right over there. Exactly now what happened again. Accumulation, manipulation, we have our buy signal. Where was the last inverse fair value gap? It was this one right over here. There we go. And you can enter on the close of this candle, stops here at the lows, and you can target a fixed 1 or 2 risk to reward trade. Let's see what happens here. We have accumulation, manipulation, and then our last inverse fair value gap is this one right over there. There we go. We had our closure right over there. You put your stops at the lows and you target a 1 or 2. As you can see, this one clearly got stopped out, so this is a losing trade. Here we have accumulation, a big manipulation right over here. We have our sell signal with our inverse fair value gap. You can enter right over there, stops right there at the low, at the high, sorry, and then you can target a fixed 1 or 2 risk to reward trade. Let's see if this one played out. We are currently right over here, so this is the live market. So we have our accumulation. Here was our last inverse fair value gap right over there. There we had our closure, stops below here, and then let's see if this one gets to our TP right over here. So this is the current market. So let's see if this happens in the next few hours. So yes, that's how easy it is. This indicator shows you exactly where the accumulation, where the manipulation is happening, plus it gives you a signal where to enter your trade. So I'm going to show you one example how it looks actually this is playing out. So let's have a look. Let's just rewind to this one. So this is how it will look. You have your accumulation. Now we have our manipulation. But now we're going to wait for the first inverse fair value gap to form. There's a fair value gap. So let's just draw this out so long. Let's see if this one gets broken through. Not yet. So this becomes our last inverse fair value gap. Sorry, fair value gap. Now this one becomes our last fair value gap right over there. We need a close below it to be inverted. We have not closed beneath it. There's our closure. Now you can enter right over there. Stops above these highs. And then you can target a fixed 1 or 2 risk reward trade. And let's see how this one played out. And as you can see, it went straight to our TP. So nice and easy. We wait for our accumulation. We wait for the signal after the manipulation. And then we're going to enter from an inverse fair value gap. This indicator is completely free. Power of 3 by Flux Charts. Type it in, add it to your chart. And these are the settings, so you can take a screenshot right over here. And this is the settings that I'm running for this indicator. Hope you enjoyed the video. Please leave a like and subscribe, and then I'll see you in the next one. Cheers.